Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, April 24th, 2019, and this is the Daily Report for Gold and Silver. The exact opposite of what we saw yesterday when U.S. equities went to new record highs and gold traded to the lowest trading point of the year. Today, we had slight weakness in U.S. equities and, with the exception of platinum, higher precious metals pricing. Another interesting facet of today's action is that this higher price in gold, silver, and palladium occurred with an extremely strong U.S. dollar, the dollar up over 0.5% and closing right at a critical resistance point of 97.76, and we'll talk about that in a second. But first, let's take a look at current pricing. Gold finished the day higher, up by about $4.70, and basis the most active June contract is currently printing at $1277.90. It had a high of $1280.70 and a low today of $1270.50. Silver also regained some of its substantial losses yesterday, gaining almost 12 cents on the day, 0.8%, and closing at $14.91. As I said, the only precious metal to trade lower today was platinum, down $5.60 at $888.20. And then palladium gained $27, most impressively back over $1,400 per ounce in the futures markets. That was a gain of almost 2% on the day. And I said that was all in light of a dollar that was an extremely strong move, up 0.5% at 97.80. Let's take a look at our technical studies. Traders, although we did see equities markets soften slightly, a little bit of profit taking going into those markets, it is the bullish market sentiment regarding the U.S. economy that has kept that market consistently strong, one of the longest bull runs in history in terms of equities, and the dollar continues to rise as it has been since the middle of March. Today, though, was a significant move in the dollar as it closed up 0.5%, a 48-point gain. But more importantly, it is the fact that it breached what we believe to be a pretty critical level of resistance. We will look at that as we compress this chart, but that level comes in at approximately 97.70. Market's at 97.80, and we can see that we had a close that, at least for now, is clearly above that price point. And traders, to get a real sense of how significant this particular price point is, and the last time that we have seen the dollar index trade at this level, we really have to compress our daily chart into a weekly chart. We're looking at the same set of fib retracements, and we can see that this begins at the beginning of 2017 up to current pricing. So we're looking at about a 2-year data set. We start this at these highs that come in at 103 on the dollar index. The lows are at about 88. So it's a pretty decent range in terms of the data set. And what we can see is that from the beginning of 2017, we had a clear and defined downtrend from those highs at 103 until it hit its low roughly in February of 2018 when we came close to 88 on the dollar index. And from that point, it in essence has been tracking higher throughout this year as well as last year. However, when we look at the big picture, what we can see is that on each occasion where the market traded near this price point, 97.70, just close to 98, we can see that occurrence right here on our weekly charts on 1, 2, 3, 4 different or separate occasions. On each time we did see the market track lower. This was a level kind of like 1370 in gold that the dollar index hasn't been able to trade above for the last couple of years. But on a weekly basis as well as a daily basis, that all changed today, and you can certainly see that within this single candlestick. Now, at the same time that we had this extreme dollar strength as it approaches 98 on the index, we had the precious metals, for the most part, with the exception of platinum, moving higher. And let's take a look at our current gold chart. And traders, I've just put up a weekly candlestick chart of gold. We'll move to a daily chart in just 1 second, but the reason for looking at this weekly is even though it is Wednesday, the week has still got a couple of trading days. What we can see is we had an effective low. It was the lowest trading point of the year. That came in at 1267 just the other day. We haven't had any extreme highs in the market, and in fact, current market pricing is close to the high, but look at the fact that the open and close are in essence identical. If not, they're one tick apart. We're getting this pure doji, and that pure doji tells us that there could be a change in the strength of the bearish trend down, and that could mean we are looking at some sort of a pivot point towards a bullish trend. To really define that, we'll want to look at our daily charts as well as a Henkin Ashi chart. And let's go ahead and convert this weekly into a daily chart. And so traders, I have just converted our weekly candlestick chart into a daily candlestick chart, and we'll convert this candlestick into a Henkin Ashi in a second. But first I want to take a look at today's price action, because the interesting thing as far as I'm concerned is that we had an update. It opened and closed above this really critical area that we have defined by this dashed line, which is a Fibonacci based retracement area. It is the 0.5% or 50%, excuse me, 0.50% retracement area, and it is of the shorter of the two data sets. But as you can see, I have just pulled up our Kitco Gold Index. Now, this covers spot gold, but it is true not only for spot, but also for futures, because when we take a close look at it, dollar strength actually took away $6.10 today. Currently, $12.7530 is the fixed price of physical or spot gold, and trading, normal trading actually bid the precious metal up by $9.20. So whereas we're looking at a $4.70 gain in gold futures and a $3.10 gain in the price of physical gold, we can see that that was really dwarfed or compressed due to extreme dollar strength. And in light of that, I think that gold did rather well today. Let's go ahead and convert this to a Japanese average chart. And traders, we talked about this just a little bit the other day. We also looked at a Japanese average chart. And what I said the other day is that when we looked at price activity from the beginning of this week, this is Monday's candle that I'm circling right now, we made note of the fact that for the first time since this most recent corrective period, we have seen the trend begin to weaken. And that's what Japanese average charts are best at doing. We look at two things. The first thing we look at is body size, and the second thing that we look at is on a downtrend whether or not there is an upper wick, because an upper wick simply says that it traded above the midpoint of the prior candle. If it has no wick whatsoever, it says that it opened below the midpoint and at all times during that trading period maintained a price point below the midpoint of the prior candle, this being a daily chart. Now yesterday we also noticed that that seemed to be a one-day wonder because we had this extreme low. This is the lowest trading point of the year at 67. We lost the upper wick, and it seemed to me at that time that the probability that this bottom action that we had been looking for had really waned because of that price action. And that kind of reversed itself today, because when we look at this, I'll go ahead and blow this up, we can see that we're getting what we look for when we look at a Henkin Ashi that's in a defined downtrend as an indication that the market might be pivoting and might reverse from bearish to bullish. And that is a doji candle, a point in which the open and closing price, even though the open is not what we call a true open, but rather the midpoint of the prior candle. So what we're seeing is we're seeing the return to, first of all, a upper wick and a rather long upper wick. and that's significant. And the second point is the price range, and that is the body size of the candle. When you see a compression of body size and a return of upper wicks, that is typically the point that you look for a reversal. We can see that in the market, for example, right in here, where we had at the beginning of this sell-off, we had rather large candle body size. We had the absence of the upper wick, but the body size reduces on the following candle. The body size reduces, it gets even smaller, and then we get that one day in which the market contained a doji-like candle. And just as we saw in yesterday's action, we're seeing that here, and that was before any real pivot point. We made the lowest low of that market cycle, and that was followed by an extremely tight doji, which is kind of what we're getting here, and that is the turning point of the market, the point in which the market started trading higher. Be it only for 3 days and a short rally at best, but nonetheless, you can see the concept behind what we're looking at in terms of using this type of chart to determine when a current trend has run its course and run out of steam. It is for that reason we will maintain our current neutral stance, but we will look very, very closely for any indication that we're getting that key pivot, that the market has concluded this correction, and we will move to higher pricing. We will, of course, issue a specific trade recommendation and send out an email and SMS text message indicating it is time to enter a long position. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.